This week the focus has been on policymakers both in Australia and also across the world. Starting off with the RBA, they left the cash rate unchanged as widely expected in April, and really the focus was on sort of how they might sort of change the language around the exchange rate and also what they sort of talked about in terms of the domestic economy. With regards to the domestic economy, they remain quite constructive, talking about sort of momentum we have seen in the labour market, as well as kind of the strength we have, or some strength we have seen, sort of in the consumer and and housing as well. And they remain relatively constructive or hopeful, I suppose, in terms of non-mining investment and how that will come through with time. Given that, so they weren't too concerned about the appreciation we have seen in the currency, although they did note sort of factually as to why they felt that had occurred. So talking about sort of policy settings around the world, as well as the sort of rise we've seen in commodity prices in recent times. So overall, that sort of highlights that they're not too concerned about the current level of the exchange rate, although if we did see a further appreciable rise in the currency in short order, they would become more concerned, and that would lead to them sort of re-emphasising their sort of easing bias and being willing to do more to actually bring down the currency. Obviously, that's kind of going to be the focus as we move forward, and we'll have to see how domestic conditions develop and also what happens globally as to how that sort of impacts the Australian dollar. Moving offshore, what we saw with the Fed, we had the release of the minutes from their March meeting. That was really largely as had been sort of telegraphed in terms of the tone. We saw it was very much consistent with what Chair Yellen had said in her speech in New York about a week or so ago. So although they remain very, very constructive in terms of the domestic economy there, so seeing quite strong jobs growth and that feeding through to consumption, they're not being terribly concerned about what's happening with business investment. They are very much concerned about what's happening globally, and they're looking to basically just get a better understanding of what's happening in terms of the risks that are out there in the global economy before they think about raising rates further. We continue to believe they will continue to raise rates later in the year. We're looking for a further hike in June and then another one later in the second half of this year. Obviously, that will be remaining dependent on terms of the global situation and very much how that plays through in terms of the real economy for the US, so how it impacts business investment and also the US dollar and how that impacts their export competitiveness. With regards to Europe, we had the minutes for their March meeting as well, and what we saw there was very much broad support across the committee for the actions that were taken to expand their alternative easing program, and that was interesting to see in the sense we have seen, I guess, more hostility in the past, given when they have started to try and provide further accommodation. So that's, again, a vote of confidence in terms of what they have done in the last month or so, and also gives evidence to suggest that they are willing to do more if they need to going forward. And they'll be really looking to actually assess how, I guess, the euro stabilises relative to sort of other currencies around the world, and also whether they continue to see momentum in the European economy, and also hoping to see sort of that basing and a rise in inflation pressures as well. In terms of what we're looking for next week, there's three key releases. We'll get an update on consumer sentiment for Australia. There we're still looking to see whether we're sort of seeing a continued improvement in terms of unemployment expectations and how that's sort of playing through into consumer spending. That's really going to be the focus. With regards to the labour force, we also get an update for Australia. We're looking for a bit of a rebound following 3 quite weak months, but it is important to note that we still think the unemployment rate might edge up because participation should rise. And finally, the last sort of major release will be Chinese GDP, which comes at the end of next week. That'll be really important for global markets in terms of assessing the sort of current momentum in the economy and whether authorities have done enough, or is there need to sort of provide further accommodation as we move through the rest of Q2 and into Q3. So we'll come and wrap that up next week for you.